It's really a pleasure for me to stand here and speak to you as the GCS partner in Kenya. But our company does cover Kenya and the rest of the East African countries, which are 5. That is Uganda, Tanzania, Rwanda, and Burundi. What we do is we have put our businesses in 4 distinct categories. And the first one is the credit bureau. We have been licensed to run the credit bureau in the Kenyan market as a new phenomenon in allowing banks to share information on their customers. The second line of business is business information reports, which is the business we started in 1996. And our company was the East African representative for Dun & Bradstreet for about 10 years on the East African market. The third line of business is credit rating, which is basically, we have developed a methodology for rating SMEs, and we partner with another company based in South Africa for corporate ratings within the East African market. And of course, the fourth business is debt collection, which we cover both on consumer and commercial debts within the East African region. So that's what we do, and our company has been around since 1996. My background is basically that of a commercial banker. I used to work for one of the largest commercial banks in the country for about 12 years before I left to start the business of Metropol. I want to talk about trends on the African continent. And there's quite a bit one can talk about when you're looking at Africa. So I've selected parts which I think that are significant to a congregation like the one that is seated here today. There are a few highlights I need to give about what is on the continent. And the population of the African continent is about 1 billion as of 2009. But this is projected to grow to about 2.1 billion by 2050. If you compare this to the other giant countries like India will grow to 1.6 billion by 2050. China will grow to 1.4 billion by 2050. And that puts Africa ahead globally. In terms of consumer spending, that has really increased. We're talking about $1.4 trillion. Middle class, which is now the focus of most of the countries on the continent, is about 500 million people. And if you look at the median age, between 17 and 18 years, 25% of the global youth population is actually in Africa. Now, what does that mean? What it means is that the future of business is going to be directed on the African continent. And if you see the changes that are taking place in terms of increasing purchasing power, in terms of improving governance, and in terms of ensuring that the economy becomes the center of the planning for the continent, what we're seeing is that there's going to be a tremendous improvement in the purchasing power of consumers on the continent. And therefore, other than other factors that I will have to look at later, I think that the prospects for the African continent are now here, and there's what is going through the media saying that Africa is now ready for business. The highlights I would like to look at is what has been happening on the economic front, and how are we, or how is it being approached on the African continent. So I'll look at the concept of the African Economic Community, the various economic groupings that have been formed. I'll pick one economic grouping, that is the COMESA, and just illustrate what sort of business is taking place in that area. Look at the credit practices on the continent and opportunities in credit risk management and what we as the GCS partners can be able to tap into to improve our businesses. Now, some time back in the 60s, the countries of the African continent were under one political organization called the Organization of African OAU. And the member countries of OAU came up with one single vision or one single thought, which was that they envisioned a Pan-African solidarity and collective self-reliance born of a shared destiny. I think this has been common thinking around the world, where people get together and see that there are certain things that they share, certain things that are in common, that if they are put together, they can be able to strengthen their ability to survive. This initiative would involve an evolutionary process in the economic integration of the continent, in which regional economic communities would constitute the building blocks upon which the creation of the African economic community would ultimately be created. Therefore, states within parts of Africa have gotten together. Like, if you look at the West African part, you've got the ECOWAS, and the ECOWAS is the economic community of West African states. It was established in 1975, comprises 15 countries, has a population of about 220 million people. It has its headquarters in Nigeria, with an estimated GDP of USD about 720 billion. That is the first economic grouping that was set up on the African continent. Now, quite a lot has happened in terms of progress in those countries, and without going into the details, I know that a lot of issues like customs union, harmonizing of trade practices, and just trying to make sure that issues that differentiate one country from another in terms of doing business are dealt with at a common level, so that it is easy for one to do business across in that particular region. If you look at the South African part, then you've got the SADC countries, South Africa Development Corporation. This was established in 1980 up to almost about the East African countries. Now, some of the things you'll notice is that countries have opted to belong to more than one economic corporation, and we'll see shortly what those countries are. Then we've got the COMESA, which is a common market for Eastern Africa, Eastern and South African states. It covers all the way from Egypt to a number of countries in the southern part of Africa. It was established in 1994, comprising 19 countries, population of 430 million. It's headquartered in Arusha, Tanzania, and GDP is estimated at about 472 billion US dollars. If you look at the other smaller grouping, which is the East African community, it used to exist, but it collapsed in 1977. There were a lot of issues about cross-border business, and even after the collapse, it was not easy to share the assets. So wrangling continued, but again, talks were established, and the East African community was reborn again in 2000. It comprises 5 countries, a population of 126 million, has its headquarters in Arusha, Tanzania, and GDP of about 73 billion. Now, these economic groupings are what now define the economic map for the African continent. When these are put together under the African Economic Community, then you find that the whole continent is basically covered. The way it's been shaded, with a few exceptions towards the north. We've got countries like Morocco, Tunisia, belonging in another group called the Maghreb group, and most of what you're talking about is the sub-Saharan area. And of course, if you look at the combined groupings, then you're talking about a population of 853 million people, about 53 countries, and a substantial amount of business taking place. So today, this is what Africa looks like in terms of the economy. Now, there are issues that are being discussed there to facilitate cross-border business, like harmonization of customs. There are issues about currency. There are issues about movement of people, like within the East African community. Now you can be able to move within the community without having a visa requirement. You can work across the other countries without having to ask for work permits, which means that anybody who is looking at any of the East African countries, you can now just look at Kenya. You have to look at the entire 5 countries for you to be able to see what sort of potential you're looking at.